Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil. Paris rapeseed. 9 weeks ago, prices drove higher to highs not seen since July last year, with a gapping move higher since filled in. However, this drive upwards did not reach its full potential, instead turned back lower, dropping down through the purple highlighted neckline extension. June to October 2023 head and shoulder stop, currently at 495.5, and the green highlighted short medium moving average, currently 486.5, forming a small descending wedge pattern, almost a bear channel in the process, until it reached the 2013 high at 464.25. Prices in late June broke up through and closed over the upper wedge trend line and made a fresh onslaught higher, reaching the primary and secondary targets for the small descending expanding wedge pattern, and rising in early July to make even higher highs than those seen in May, and finally fulfilling the potential topside at the congestion seen in September 2012 between 513.75 to 519.5. Once there, prices again fell away, down this time a little short of the 2013 high, down as far as the rising purple highlighted medium moving average, currently at 472.75, and that was at the start of last week. We've since seen a rise late last week, just over the purple neckline, before a fall this week to just under the green highlighted short medium moving average. All this activity has given us right now a June to date based very wide bull channel, currently at 467.25 to 519.25, which I've highlighted in dark blue on my daily chart. Now this, I stress, may not be the final pattern here, but it is the pattern that is currently dominant, and will thus treat the bull channel as the key current feature for the purple neckline, with the purple neckline, acting like a median line with or without the aid of the green short medium moving average. I'm now wondering and anticipating what the next pattern will be here. Winnipeg canola. In the last days of May, the market moved up, breaking through the gold highlighted long moving average, currently at 649.60, but soon after running out of steam on the upside from the effort of doing so. However, in this process, the month of May became a monthly key reversal up, a longer term bullish pattern that also will, I suspect, come to influence actions in this market. However, June was not going to see any immediate resultant move higher, and instead prices dropped, making lows not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June, on the May 2023 low at 611.10, and prices have since zigzagged higher. The initial zig was up to the combination of the gold highlighted long moving average and the June 2021 low at 655.90. The subsequent zag was down again just over the May 2023 low, and the latest zig higher was up towards the May highs, just over the lesser Fibonacci line at 679 even. All this toing and froing has created a wideish bull channel, currently 625.70 to 690.30, since late June, which I've highlighted in bright red on my daily chart. Now, I like the look of this bright red bull channel, but there are 3 points that I think should be considered, which may possibly hinder or change the outlook, not wholly right now, but may now, shall I say, interfere. The first and most obvious is the concentration of moving averages, all within a small area, specifically between 645.90 to 652 even right now. They are not acting as a support, haven't done in recent times, and at most the gold highlighted long moving averages acted as a resistance in the past. Personally, I suspect they may be more of a nuisance than anything else right now, but we shall see. The second point is actually something that I have not done as yet. I have not drawn either a bullish Andrews nor a bullish shift pitch for the mid-February to late June action. I have deferred doing this right now because the mess of coloured lines we already have close to the market would make such a drawn pattern more of a confusing mess than it already is. However, I reserve the right to reflect and possibly draw either of these bullish pitchforks, Andrews or Schiff, at my discretion at some future time. Finally, the third point relates to the second somewhat. It is this chart is too concentrated, a mess and messy. The only elegant thing is the bright red bull channel, and this lack of clear market guidance is troubling me somewhat. I will watch cautiously to see if it becomes clearer. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we had the key break higher over the upper time, currently at 38.05, with the August to November 2022 bearish shift pitchfork. Yet I've still kept this on the chart, this pitchfork on my daily chart. Why have I done this? It was because during May the market hesitated and built a base on this very thoroughly broken upper time, helped at the time by the 50% Fibonacci line of the May 23 to April 24 move at 38.75, as well as the gold highlighted long moving average currently at 39.13, plus the significant bright red highlighted May 2023 to date uptrend currently at 39.49, which has even today become involved with the market. The move back up started as a counter to the monthly key reversal down we saw in April, creating a small reverse head and shoulders bottom over May with a green highlighted neckline extension, currently at 39.48. That has also been playing a role this week. 4 weeks ago I said about this move back up, and I quote, "Prices just need to overcome the following. The green highlighted short medium moving average, currently at 39.43. The mauve highlighted medium moving average, currently at 40.43. The dark blue neckline, currently at 41.61. Of the September to November 2023 reverse head and shoulders bottom. The July 2023 high at 41.89. And the twin 38.2% Fibonacci lines of the July 2019 to March 22 move at 42.39. And the May 2020 to March 22 move at 42.74. With the neckline of the September 2015 to November 2017 head and shoulders top currently at 43.05 nearby. So quite a mouthful in the way, top side, and quite a bit to be looking forward to if prices do rise. And that's the end of the quote. In early July, prices did rise, but soon fell away, leaving, if you include the changeover gap, what looked like an island top in the first week of July. However, the decline was stymied as prices did not fall as far as last week of June, with the market supported by the plethora of supports below previously detailed. And we have seen the start of what might be a slow rising higher again. In this rise, I've drawn a new support. It may be only a 2-pointer, but the mid-May to date uptrend, currently at 38.90, highlighted in dark blue on my daily chart, has merit. Why do I say this? Well, it is because I can see a new pattern emerging, melding together two separate existing trend lines. Thus, if we take this new dark blue uptrend and the previously mentioned dark blue neckline extension to the dark blue September to November 2023 reverse head and shoulders bottom, then together we will have a wide but reasonable bull channel, currently 38.90 to 41.61. I suspect that this is the pattern that the recent action has all been leading us to. So for now, we'll have to wait and see if this becomes true. And one final point is the point I have been stressing now for 18 weeks. I gave my thoughts on what was going on thus, and I quote, "So what now?" Well, for this, I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. can think of no better way than to still monitor what the market does should we get up there to that 44.08 level. We have been up over it before in early April, but there have been no longer term closes up over it. And by that I mean monthly closes, none over it. Not yet. There's a longer term target, so please keep a lookout. Maybe not in July, but in subsequent months where we close, should we get close to that 44.08 level. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.